Fantastic numbers today. Insane numbers, 120 have RSVP'd, so I can see a couple of little empty chairs, but I'm sure that they will fill up as we go. So apologies for those sitting in the front row, you have to put up with the volume for those in the back. So my humble apologies for that. Our agenda today is a little bit different to usual. Normally we have a very set structure. Today it's slightly different. There's been some very large things that have happened in the industry here in the last, I'm going to say 6 weeks, that we thought was timely to try and bring to yourselves. One of them is the ATO have come in with a new GST Withholding Tax system. So as interesting as those topics are, they are very topical. So I would like to really celebrate my birthday, and talking about tax wasn't really on my agenda, but unfortunately that's just going to be how it's going to go. But I guess before coming up with those two, what I'd like to do is tell you a little bit about where we've come from. Seeing this massive number of people here today is quite impressive, but it all stirred, I guess today is, for those who aren't aware, is our 6th birthday. I'm not sure why that's not working. Yay, 6th birthday. Thank you. So where it all began. So for those who haven't heard, it started around my kitchen table, and there was 5 of us at the beginning, and we all figured that none of us knew it all, but collectively we knew, I guess, more than individually. So as each mate invited a new mate, that outgrew that area, and we then moved into the lounge and invited a few more mates, and then we went public. So 18th of August 2012 we went public. This was our very first meeting and our very first agenda. There were 15 people that turned up to that meeting. So seeing 120 here today, just 6 years later, is it tickles me inside, so in all seriousness. Now, for those who were there, this person is still in the group. This person is still in the group. Pam, are you here today? No, typical. And Joe is still in the group. So of the 15, we've still got a few of the originals still hanging around. And both Cam and Joe are regular helpers in my community, so I very much greatly appreciate their assistance along the way. Having grown from 15 people, our networking community now, the meetup group is 865. So to get 120 out of 865 is a massive achievement. I guess there's a lot of other networking groups with much bigger numbers from how many people actually are part of the meetup community, but not how many actually participate. So I'm quite proud of how much activity we actually generate in this group and how active we are actually as a community. As a spin-off of that, we then started a Facebook community. So we've now got 1,300 and something odd people in our Facebook community. And that is growing, and the number of interstaters is actually becoming to the point where we're actually looking at taking this interstate and running this community, and I'll talk to that in a sec. But from those little humble beginnings, I've learnt along the way, and you guys have learnt along the way, and we've all lifted together. But as a byproduct of that, now do training and education, we do mentoring and coaching, and I guess all of it is really because of you guys. And I give back because of how much you give me. So I personally want to say thank you to you for this process. So from my side, thank you. Now, this little group is now starting to get a big voice in the community, in that property development sphere. So a lot of the issues and challenges that you guys bring me on a daily basis, I take to industry forums like harassing Brisbane City Council, like going to the Urban Development Institute of Australia, where I've been a member for the last 6 years, and trying to raise the issues that we have, because we are so small, it's very hard to get a voice. So I guess I want to thank you guys for giving me that opportunity to provide a voice on your behalf back into that community. So thank you from that side. And we are getting noticed, as I said. Channel 7 and Channel 10 both interviewed me. I only got onto the air for Channel 10 that I'm aware of, but and it's one of those things where they interview you for 15 minutes and then they take one time slice and they take it completely out of context, and hey, I got my face up there, right? But the big news that I wanted to say is this is growing to a point where Sydney has been calling our name, and we are going to Sydney. We're starting our very first meeting like this, so hopefully we won't get as few as 15, but we're starting our very first meeting in September, on September the 8th in Sydney. Now for the fun part of the day, tax. Yeah, I know. On the bright side, we're going to finish with drinks. So as I was saying at the start, on the 1st of July came some changes to the GST Withholding Tax, what's called the GST Withholding Tax regulation. It doesn't actually change your GST obligations. What it does is change the process of that and hence the cash flow of that. So it's quite important to understand, and also introduces a lot of regulatory compliance side of things, which is going to complicate the process significantly. Now, massive disclaimer, I'm not an accountant, okay? This is me relaying information that the ATO themselves presented at a presentation that I went to, and I have plagiarised their content, so I take no responsibility for what it says. I'm really merely just delivering the message. So, some key points to consider. I might do one thing if I can first. What happened to my mouse? Okay, some key points, whoops. So it applies from any contract from the 1st of July forward. Now there are some challenges if you had a contract that was signed prior and settles after, and there is some transitional elements to this. They didn't go into detail on those transitional elements, but if you are in that boat, it can get quite messy, so I suggest that your solicitor is the first person that you engage in. It applies to new residential premises and potential residential land. This thing's going schizo. Let's... Killed it. Oh, hello. So the potential residential land, that is going to be it's an unknown entity so far as we're concerned. When you're buying an existing house that is already second-hand stock, it technically doesn't have GST apply to it. But when your intention is to subdivide it, is it then potential future land? Very grey situation. I would make sure that you engage with your solicitor to make sure that that is very clear in the process when you're actually purchasing up front, okay? Because there may be a GST obligation from the seller selling it to you that you might not be aware of. And I'll come to why that's important to you, because there's some obligations that sit both to the seller and the purchaser in this process. So effectively what's going to happen is the purchaser is going to pay the GST directly to the ATO. Now in the past what would happen is that the purchaser would give the seller all the funds, and then the seller, when they next did their BAS, would work out what their tax arrangement was and then pay that obligation. What the ATO has said is that they see too many developers who deliberately phoenix their developments. So they deliberately crash it and dissolve it, and before they and then go and recreate a new entity, and they dissolve it and don't pay their GST obligations. So in order to stop that, what they've said is they're going to get in up front at the point of purchase. So they have effectively jumped in front of the bank. So they take the money away before the bank even is involved in the process. So that is going to change massively your settlement and conveyancing process. So what does it apply to and what doesn't it? I've already touched on this, but new residential premises and potential residential land. The withholding tax process doesn't apply to where some other elements may have GST. So commercial residential premises, for example, commercial premises do have GST, but the withholding element is not going to apply to them. So from a supply point of view, how much are they going to take off you at the point of settlement? So it depends on what you are selling and under what circumstance you're selling it. So the bulk of the time, they're going to take 1/11 of the purchase price. If you have the ability to claim the margin scheme, and many of us try to claim the margin scheme or should be, trying to keep our profits as high as possible, then they will take 7% of the purchase price or the contracted price off of you directly at settlement. So what happens there is they're actually taking more money off you than what you would actually normally have to claim. So if we have a look at the old cash flow process, purchaser would give me some money, or you, maybe all of us hopefully, give us some money. We would go to our accountant, calculate what our GST obligation was, and at the end of the quarter, or when our next BAS statement is due, you may do BASs monthly, you may do it quarterly, you would then remit that. So you've held onto those funds for that period. So if you did it on the first day of the quarter, then you actually effectively held that money for 3 months. Now it's going to be the other way around. So all of that money goes to the ATO first, then they have the cash and get to use it, and you then have to do the remittance and then claim back any credit where you've been paid in advance. So your cash flow mechanisms, instead of earning interest and be able to make that money work for you, is now costing you interest. So your cash flow needs to manage that process very succinctly. So some supplier obligations. So the supplier must, so the supplier is the person selling, so that person must notify the purchaser whether GST will or will not apply to that purchase sale. Now you must also do that in writing, okay? And there are certain criteria that you must use in that process when you notify in writing what that is. And then the supplier must then lodge their BAS with the ATO in order to claim those credits back. That's effectively what the supplier's obligations are. If you do not, it's a $21,000 statutory fine. $21,000 criminal offence, I should say, and then there's an administrative offence, which is another $21,000. So $42,000 if you do not declare, does GST apply or does GST not apply when you sell your property? Sell, when you sell. So the supplier notifications must include all the things that you would normally have on a normal BAS type statement. So the name of the entity, the ABN, the amount that the purchaser is actually meant to pay, etc. So it'll be that 1/11th or that 7%, I guess, calculation in that instance. Now, from a purchaser's point of view, so this is the person who's buying it off you, they now have some additional obligations as well. So you have notified them, hey, there's a tax obligation that's sitting on this property. Now they have a process that they must follow where they're first of all going to obtain that notification up front from the supplier. Then they have to lodge a form with the ATO to say, hey, I've been told of this obligation, and this is the amount of obligation, here's the property details, here's the entity details and the ABN of the person who's actually supplying me this property. The ATO will then give them back some numbers that they track. So there's a PRN, which is a payment reference number, and an LRN, which is a lodgement reference number. They then use those details to then lodge a second form to actually declare how and when that is actually going to be paid. It's fun stuff, right? Language. So what is on the form? I'm not going to go into the details in specifics other than to say that your solicitor and in the conveyancing process is going to be the one who's going to manage this process, so they will be the one responsible for completing these forms on your behalf. The conveyancing process is going to get more expensive on both sides because there's additional compliance that is going to be part of that. And this is not a Queensland only thing, this is an Australia-wide thing. So no matter where you are, this is going to actually get more expensive to purchase and sell properties moving forward. And then the Form 2, as I said, how and where you're going to make those payments. So how is the money paid? So the purchaser, where do they pay that money to the ATO? There's a couple of obligations, a couple of options as to how it's paid. So in some states, and we don't have this yet, but we're, I guess, working towards it, in the e-conveyancing process. So in the states that have it, I think Victoria has it, and I think New South Wales has it in some limited respects. But at that process, it's all basically pre-lodged electronically. One payment comes in and it gets distributed in a whole bunch of different directions in one transaction, and the title is actually issued all in the one process. So that e-conveyancing process can be one mechanism. So when that comes to us, that would be, I guess, the preferred way of doing it. There are other electronic options, so you can actually approach the ATO and say, can we have your EFT and or your, can't remember the name of the BPay details, and actually pay that. The most likely is it's going to be a cheque at settlement. So this is, I'm going to say in 95% of all circumstances, it's going to be the cheque at settlement. And the reason for that is these other options here require the cash to be paid in advance of settlement. So if you think about a purchaser who's going to purchase the property off you, almost guaranteed they're getting bank funding. And no bank is going to forward cash on a property that they don't yet have a title or a mortgage over. So almost guaranteed, my humble opinion is that the cheque at settlement is going to be the way that that's going to be. And other payment methods available in the ATO, which is them saying, we don't have any other methods yet, but we might one day, and if you go there, that's where they'll be. So some practical implications. Who's enjoying this so far? No, we got some video footage. Who's enjoying this so far? That's awesome, okay. Okay, so the changes, it doesn't change what your obligation is. I want to be very clear. It doesn't change how much tax that you will pay. It changes the process that happens around that and the way you pay and the way that that tax is actually collected. Okay? It imposes some compliance obligations on both sides. And the costs of not complying, as you saw, was actually quite significant. So that's going to be an issue on both sides. There's going to be massive flow-on financial implications with regards to your cash flow. So if you think about a project, you might have a $20,000 or $30,000 GST obligation, and the ATO has instead taken $70K off you because that was 7% of $1 million sale. You have to wait to the end of that quarter to then claim that back. So you're going to be out of pocket. That's going to cost you a lot. You're going to need to be much better at managing your cash flow moving forward. There are some transitional rules. The details on those transitional rules were not clear. So if you have purchased prior under contract but you have not yet settled, then there is a transitional process as to how they're actually going to deal with that. I don't know the details of that. My gut feeling is that they're going to try and impose that process, but it's a bit difficult to do. And the cash flow, which I've already touched on quite significantly. So your BAS preparation, the actual reporting itself is not going to change. So most of you doing your returns are probably getting your accountant to do those. So that BAS reporting will still be exactly the same, except now what's going to happen is there's going to be a credit sitting against that account now that you can then say, well, my obligations are offset against that credit sitting there. Can I please have the balance back? The fun stuff. What happens if there's a mistake? What happens if you fill the form in wrong? Or what happens if the purchaser is dyslexic on the bank details that they transfer and the money goes to a different account? So there is a process where you can actually apply to the Commissioner of Taxation for that to be remedied. However, if you can only do that, I guess, on the 7th of the month if you're doing monthly BASs, or the 14th of the quarter if you're doing quarterly BASs. So you have to wait till the end of the quarter plus 14 days before you can actually make that claim in error. So you could be not only out from a cash flow perspective, but now you could be out from an error perspective. It's not clear as to how long they're going to take to actually remedy that error. There is already an updated REOQ contract for those who aren't aware. So on the 1st of July, the updated contract came out, and there is now an appendix part of that contract which actually now covers this so that you can declare your obligation in writing as to your GST obligations up front. That is what that looks like. Now, I've already signed one contract under this. Hasn't been countersigned yet, but I've signed my part. The crazy part to this, in my humble opinion, is they're asking the purchaser up front whether or not they're registered for GST, and then the supplier down the bottom. Whereas I think it should actually be the other way around, because the supplier has to declare first, and then the purchaser then says, well, what is my obligation? So I think they've actually got the form back to front, but be aware of that. So it's basically a ticker box. Will there be a GST supply obligation, yes or no? And then if there is, then the person up the top then says, well, this is how I'm going to deal with that. Now, I don't know about yourselves, but for many of the projects that I run, GST is not actually due until such time as you earn an income on it. So only when you earn 75k and above. You can't earn it until the day you sell it. So you may have a project that runs for 9 months. I may only do one BAS return in that whole time, because there's no point claiming it on small amounts. Okay, if you're doing small projects. If you're doing big projects, then it's probably worthwhile doing that as you go. I guess the challenge there is I may not be registered for GST on the day I purchase it. Question?
Yeah, I think you just touched on that. We've seen this already as well, and under a contract where you're entering into it initially in your own name, but maybe have a deed of rescission clause, so you might be opting into an entity later. At the time you're signing the contract, you might not be registered, but your entity may well be. When does that impact sort of come into play?
I'm the messenger. I'm not the custodian of the data. I'm sorry.
It gets a bit messy.
I can voice an opinion, but it's probably not. It's probably best done over a beer and not over a video recording. Sorry, question to Rachel at the front. Someone, a runner, please.
What does creditable purpose mean on that line? Are they acquiring the land for a creditable purpose? Like, I mean, is this presumably not applicable to PPRs? So this would be applicable only in a development sense when you've created a brand new property from nothing.
So I'll go back and answer the first question, and then I'll come to the second one. Okay? So the first part of it is, if you are purchasing an existing second-hand dwelling, then the seller has no GST obligation. However, their very first thing is, when does it apply? It applies to when there is potential for future land subdivision. So that's an area of grey. Now, I don't have the answer. All I have is the question that you should ask your solicitor and or your accountant. Okay? So if your intention is to subdivide that, then it's arguable that a GST obligation would occur, in which case you can use the GST charge as a credit towards your project. Now, without getting into Tax 101, effectively, any time you get issued an invoice that has a GST element to it, that is a credit towards your GST obligation. It is deemed that you have already paid that portion of GST. So this is saying that portion of GST may or may not have already been paid.
Can I ask another question, though?
You just did.
What if you're the developer and you're selling to a third party?
What are you selling?
A newly created house or something.
So newly created houses will have a GST obligation.
Do they then become, they have to pay GST then on that?
So I want to be clear, they have always paid GST. GST has always been part of that process.
Right.
As the person who created the brand new property, you had a GST obligation. Mm-hmm. The difference is now the purchaser is getting visibility of that. Mm-hmm. Before you told them, hey, it's $1 million sale, they had no idea that there was GST as part of that $1 million price point. Now they're going to be exposed to the fact that there is 1/11 of that is GST. Okay. Rich?
Hello. Hey Rob, just following on from that then. So up to now, obviously a private person could sell a block of land, and obviously they haven't done anything to that land, haven't split it down, there's no GST payable. But now if they're advertising it, or an agent is advertising it as a potential development site with 3 blocks nicely drawn up over their lines, what potentially does that mean to the private seller? Because now potentially it's been sold as a potential development site.
Absolutely, that's a damn fine question. So, and I'll repeat that for those who didn't catch that. okay? So a second-hand house that gets sold has no GST obligation. However, when your agent says split a block, 2-lot subdivision subject to council approval, now it's potential land subdivision, correct? So now there's a GST obligation because they've declared it up front. Now, whether or not them as sellers are, I guess, able to do registered for GST is a separate issue altogether. But effectively, it has triggered the fact that they may have a GST obligation. Sorry, just...
I guess the answer is, question for me is, if you don't call them out on it now and say, hang on, you should be ticking the box which says GST, then to you as the buyer, I don't know if that has an impact on you, what it means you can't see claim those credit facts straight away. I was saying, I'm just trying to figure that out in my head.
So again, I don't have the answer. All I'm doing is raising your awareness so you can ask the right question of your accountant and your solicitor, okay? And I think you're going to have to ask both. I'll come to you in 2 secs. I think it's quite dangerous territory, and we need to be really careful that we actually cover our bums really carefully here, especially in the next 3 to 6 months while everyone's learning it. The process, and in fairness to the ATO, I was there, I guess, when the gentleman presented, and they got given the legislation like 3 months ago, and they just said it has to work on the 1st of July. So they're really the enforcement agency, not the people who actually wrote it. So whilst everyone might like to hate the ATO, in this instance, they're actually in the clear, in my opinion. But I think it's... The danger, I think, is that if they've incorrectly nominated yes or no, they could be up for $21,000 fine for criminal offence and then $21,000, I guess, administrative offence for declaring that inappropriately. So the seller.
We've just been through this in great detail recently, and basically, if you're carrying out an enterprise, it's GST. That's it. It's where it starts to get grey is if you inherit your mum's property and she's passed away and it's old, and it's advertised as a development block. That's where it gets grey. But if you're carrying out an enterprise in any way, there's GST.
Absolutely.
New, old, or whatever.
And that's always been the case. So the ATO is all about intent. Okay, if your intent is to carry on a business of property development, even if it's your first project, it is still your intent to do that, then you are treated as a business. I guess somebody selling a property they inherited, their intent was not to do that, so they could argue, I guess, the other way. But that's where it gets grey. I can see 1,000 questions on this, Mohammed.
Okay. So I sold a new townhouse a couple of days ago, which I know is applicable for GST, but the form that the real estate agent has used is the old form, and I called my solicitor and they said it's kind of the onus is on the buyer, not on you, and you're not going to have an issue.
Your solicitor is wrong. Get a new solicitor.
Okay.
Your solicitor is wrong.
Okay, so I could be potentially fined $21,000?
Absolutely.
Okay.
So the obligation is for you to give it to them in writing. So you can give it to them in writing outside of the contract. So you can still do that, but the new version of the contract has it already built in so that it does that for you. Okay? So if you've used version 14 and not version 15 of the REQ contract, then get your solicitor to write a letter to the other side and say, we believe that there's a GST obligation and this is what that figure is and here's my ABN and here's my entity details. And so you can still give it to them in writing and you still have met your obligation.
Okay, so it's okay that it's not specifically answering these questions?
It is okay on there, yes. However, it is not the purchaser's obligation, it's your obligation as the seller.
Okay.
So one way up the back.
Hey, just when selling the property, would it
Sorry, just microphone to the chin, I can't hear.
Sorry, when selling the property, would it just be easier to advertise the property as whatever your cost of the property is plus GST? That way everybody knows and it's all kind of done separately.
Over time, that's probably going to happen. My personal opinion is this is the first time that Joe Punter buying the finished product has ever been exposed to the fact that GST even exists in this industry. Okay? And everybody says, hey, the cost of these, affordable housing, why is the ATO taking 1/10 of or 1/11th of the cost up front? Joe Public, I think, is going to get jack of that and start banging on the door to say, hey, ATO, you're part of this issue. This affordable housing issue is you. And this is the first time that they've ever been exposed to it. Whether that happens or not, that's just a personal opinion, but this is the first time that they've actually seen it there. Watch this space. Simon?
So take a situation where you're buying a property that's a potential development site from an old lady who's just gone into a home, who's still able to sign documents, but...
it's quite specific, yes, keep going.
Do you deduct the GST off the sale price? And
Sorry, are you purchasing off her?
Purchasing off her.
Okay, so again, I am not an accountant, so this is just an opinion based on my understanding. My understanding is she's owned that forever. Her intent was never to carry on an enterprise. She herself is not registered for GST, so she would tick the no GST applies.
So does that mean I pay the GST up front?
So she had no GST obligation, therefore you would not have to, so it would effectively make your transaction exempt, so you don't have to do the Form 1, Form 2. If, however, you then on-sold that, the same property, because you are the megalomaniac developer that I know that you are, Simon, you would have to declare, yes, that it is actually GST applicable. Okay, so a hypothetical case study perhaps. Now I'm not going to read this word for word, but let's just imagine that you're a developer doing 12 units and that Mrs. Smith wants to buy the unit off, one of these units off you at $500,000, including GST. Okay? So we do the calculation on what that GST obligation is, and 1/11th of that $500,000 price. Hang on, I can't do that. Sorry, the cost base. So we've determined that the cost base in actually calculating this. So if you're doing the margin scheme, then the cost base is the difference between those two figures, yes? So settlement occurs in 30 days' time. So we are registered for GST, but she is not. Okay, so that's the background to this. So if we walk through that process, we have to let her know that we are supplying a GST applicable product. We have to, we have to give her notice. We have to tell her what the notice is about. We have to actually calculate, because our intention is to do the margin scheme, that we're going to do 7% of that price. So we're paying $35,000 up front. Sorry, she is paying $35,000 up front to the ATO. And then we go to do our BAS at the end of the quarter, and we determine that we actually had an obligation of $27,000. So therefore, the $35,000 is in credit, and there's $7,000 that we get back at the end of the quarter. So effectively, in that scenario, $35,000 has left our pocket for anywhere up to 3 months, so that we then wait for that $7,700 to come back. Does that make sense? Now, from the purchaser's obligation, she'd have to fill in the Form 1, she'd have to pay the $35,000 at the ATO, and then the Form 2 to tell the ATO how that money was actually paid. Clear as mud? Okay, so for those of you who are nerdy and would like to know more, I know. So the ATO has given lots of information that you can go and look it up. They've got podcasts, they've got videos, they've got all sorts of elements as to how to look it up. Effectively, I've covered it as clearly and succinctly as I believe that I can in the short timeline. Who was aware that this was coming through? Oh, actually, I'm quite surprised at the number that were aware. So who was aware of, I guess, the challenges that was going to create? Not as many. Okay. Can we see that as an industry, this is going to be very problematic for us, cash flow-wise in particular? The first couple of transactions, I think, are going to be the litmus test for many of these issues that I've raised. I don't have the answer to them. All I've got is the questions. So, question?
Just a really quick one. Not sure if you've heard any discussions around whether or not if the supplier or vendor discharges all obligations, but the buyer defaults on the process at any point, whether or not that creates any issues for the vendor?
I don't know. I don't know. However, my lay assessment would be that would actually hold up the settlement process because they need to declare that Form 2 to say this is how and where that money is actually going to go. You've declared up front this is what the obligation is. Tell me where the money has gone, and if they don't, then what's going on? So it may delay that settlement process.
Thanks.
I was going to ask along those lines, if you just want to hand over the whole thing to your conveyancer, solicitor, or the right person, and they don't get it right, who's liable? Are we, the developer, liable?
You're asking questions I don't have answers to. From a pure legal sense, yes, you're liable. The same way that you get your accountant to lodge your tax return and the very form that he gives you to sign says that he takes all care but no responsibility. The exact same way. It is your obligation to actually check that things like settlement processes and clearance certificates and all that sort of thing are followed. You may not have to be the one to do the work, but you certainly need to be the one who signs off on the work.
Another question, you know how you said you had to the tax department holds it for up to 3 months till your next quarterly BAS is due?
Assuming you lodge a BAS.
Yeah. Is there anything that stops you from registering for BAS monthly instead, and therefore they only hold it monthly instead of quarterly?
You can register for monthly BASs, absolutely.
And then you get it back sooner?
Absolutely. But if you register for monthly BASs, then you're going to have all the additional accounting costs that are associated with that until such time as you deregister for monthly.
Okay, thanks.
Linda.
So I did a contract last financial year that settled on Wednesday for a new block of land. None of this was taken into account. They said it wasn't a problem.
So there is a transitional process. I don't know what that transitional process was. They may have either A, not known that there was a transitional process and stuck their head in the sand, or B, reviewed it and said there genuinely was no problem.
I assumed if it was done last financial year on the 14 contract that this wouldn't apply, but because this didn't come in till...
No, it does apply. The question is, I don't know the process around that. I'm trying to keep it very simple because most people aren't going to be in that boat now that we're on what day's today? The 19th, 21st? So most of us moving forward are now just going to be dealing with the new process.
So is there a information line? Like, would you ring ATO for this?
1-800-ATO, I don't know.
Yeah, so ATO, because the solicitors don't think it's a problem.
Yeah. So in my experience with the ATO in the past, they're actually very well resourced and very helpful whenever you've got issues and challenges like this. They're not there to beat you up. They're there to follow a compliance process. It's very easy to hate them, but they're just people.